Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, looking at the daily view, that since we had the surge on Friday to the downside triggered by an algorithm crash or flash crash as they would call it, is that the market is currently attempting to stage a recovery, trading around $15.50. Looking at the weekly view, you can see here the market could fall lower towards a target of $15.35 or even lower. That will depend mainly on the gold. However, if we look at the daily picture, you can see here from the two new lows is the fact that the stochastic is clearly showing bullish divergence. Therefore, I do expect to see the market to recover from that $15.35 level and look up towards initial resistance, coming in now at $15.85. Now, clearing that would give further scope to the upside to $16.15 and reassess from there. But seeing this bullish divergence does give some hope that the market can recover now in the next 48 hours. Looking at the daily on gold, you can see here also there is some bullish divergence here. However, since the gold decline, which the downtrend, if you can see, emanates from the high of 1296, the market still has a lot of work to do, with the ADX now posting as a quite a firm downtrend, as you can see here with the minus DMI and also the ADX. Could see gold now fall towards 1208 to 1201 to 02 with a target of 1195 before any recovery. It now has quite a bit of work to do to the upside, and if we can clear 1216 to 18, that would give further exposure to 1229 to 32, but it really needs to clear that 1618 level to get that move. What is concerning though, the prices are still pressing to the downside and has made a new low of 1211, right in front of the support of 1208. Well, the Australian dollar still remains slightly to the negative side, however locked within the range of 75.70 to 76.25. The market still licking its bruises from last week after the RBA kept interest rates at 1.5%. Have released a statement after the decision offering no hint of its bias. The market was caught slightly off guard from the recent hawkish comments from the former RBA member John Edwards, who recently commented that the RBA's future course could point to a rate hikes something like 8.25 percentage point tightenings towards the period of 2018 to 2019. So looking at that may help the Australian dollar recover if we get further hawkish comments, but as I mentioned from the statement, there was no hint to its bias. On the day though, I do expect to see weakness continuing with immediate support holding at 75.70. Now do note beneath there it is viewed that we could be seeing a slow base being built from 75.45. If we just lose that. And from there, we could see a bullish recovery. But at the moment, I still expect to see, as I say, weakness to continue and any advances to hold to 76.25 as a short-term cap. I would like to see further evidence in the US dollar to recover, although the Bureau of Labour Statistics reported on Friday that the non-farm payrolls grew by 222,000 in June, well above expectations of an increase of 173,000. The forecast was looking to 138k. The unemployment rate fell to 4.4%, a step above the market's forecast of 4.3%. So as I mentioned, although the US dollar has got a slight footing, it needs to recover further to get the market to look away from this 114.35 to 114.85 resistance and look towards the support that comes in at 113.80 with this uptrend that emanates around 112.40-45. Now the immediate support beneath 1380 is 1530. but the technical implications are not as bearish as I would like, so it does give greater concerns that we could see a rise towards the top side for the start of this week. So do be aware of that if you're trading from the short side. Well, dollar yen still defies gravity as the market rallies on and now looks towards a 114.30-35 level, even though the indicators are overbought and the ADX is extremely high now. And do note, as before back here in early May, the market did reject that level around 114.30-35. The trend stopped. The overbought indicators did unwind, and I do expect this to happen here soon. Although we could see a stretch beyond 114.30-35 to 114.95.05 just to push that last of the shorts out of the market and move beneath the support of 113.55.65. We'll get the initial move down towards 112.70.80, which is my preferred side at this moment. And wrapping up with gold, the market took a very heavy knock to the downside on Friday as it plummeted from 129.74 high to 128.66, right in front of that support of 60.65. With the technical implications still bearish, we could see this level give way and look towards its objective, still holding at 127.70.85 and reassess from there. Any advances on the day should find resistance around 129.30 to 35. So that wraps up my daily video. Thank you very much for joining me. I hope you have a great start to the week.